The Lal Street posted gains for the second week in a row. The Nifty is now inched 2.5% higher in the last 2 weeks. On Editors Roundtable today, we take a look at how the markets have fared in December in the past few years. We'll also tell you the 2025 outlook for the Indian markets and key asset classes. And as we inch closer to the weekend, we'll dive into the Indian alcohol companies to understand their growth potential. I'm Reema. With me, Prashant, Nimesh and Nigel are joining us on the show. We've got Harish Krishnan, co-CIO and Head of Equity at Aditya Birla Sun Life Mutual Fund, who'll be joining us in just a bit. Hi, guys.
That was a deliberate line, Reema, you put in?
No?
We're going to dive into alcohol. Oh, you said alcohol stocks. I don't know what Nigel is doing. And that's the piece he's presenting.
Yeah, we'll dive in as well over the weekend. Yeah.
By the way, this is a busy weekend, Reema, and you usually have all the dope and information, right? There's a concert happening
There is
tomorrow.
a concert happening tomorrow.
Tomorrow.
Dua Lipa. Yes.
You going?
Who's going?
Which concert, sorry?
I think
Dua Lipa.
Dua Lipa. I also heard an hour ago. So, but into the end of the year, there is a lot of stuff happening as well. You know, let's just quickly take 2 minutes and put out a couple of points in terms of where we stand now as far as the week is concerned. So, you know, this week has been quite incredible because we came out on that Monday with all guns blazing. Actually, you know, you go back to Saturday when that election result came and there was, feverish pitch about that gap up on Monday, if you remember. And of course, Monday we did get a gap up and it was a pretty strong start to the week. But then somewhere it kind of fizzled out. And, you know, yesterday, of course, was perplexing with that big fall, that, 11,000-12,000 crore sell figure from the FIIs. And then, of course, Friday, markets really recovered and, added about 200 plus points. So the weekly statistics is up on your screen. And the Nifty is up just under 1%. Nifty Bank is up just under 2%. The star really has been the small cap index, which is up 5%. So, whatever else this week, as compared to last Friday, portfolios would be feeling a little better, especially if you look at the 2.5 on the mid cap and the 5% gain that we've seen on the small cap index as well. So for all the gyration, that's a change at the end of the week that we've seen. In terms of things to watch, we're getting into December by the time we come in, etc. I just want to focus on currencies a little bit. And then Harish Krishnan, as Reema said, is our guest, and he's also somebody who's watching currencies pretty closely. So take a look at this, right? Thursday, of course, markets were shut, but we almost had a 1% fall in the dollar index on Wednesday. It was the largest one-day fall for the dollar index since Powell's dovish speak during Jackson Hole. That is, you got to go all the way back to late August to find that that 1% or nearly 1% fall that we had. Just to take that point forward. What is the dollar index made up of? I mean, it's a weight against a basket of currencies, and 3 of the largest currencies within the dollar index are looking stronger. Euro is seemingly turning around from very, very beaten down levels. The Japanese yen has seen a big move. The dollar JPY is moved from 155 to 150-ish levels in a span of just 5 trading sessions. The third component is the CNY, on which I want to sort of get in Harish in just a bit. So 3 of the sort of important currencies are looking stronger. By the way, the dollar JPY is broken below its 200-day moving average. The last time this happened was July 31st. And we all know what happened in the first week of August. That was that big shock. And, markets had sold off very quickly. In a week, markets were down about 5-6%. The point I'm making is this. It's very difficult for the dollar index to... The consensus has been that the dollar will be strong. US exceptionalism, etc., etc. But the fact is, as we wind down this year, it's very difficult for the dollar to be stronger if 3 important large components, currency components, are actually looking better. So it's possible, and this is actually a bit of a non-consensus view, it's possible that the dollar index cools off. And that is not exactly bad news. Actually, it's good news. It's outright good news for emerging markets because that is seen as, as a signal for EM flows, etc. Just one more thing, which I think sort of went under the radar. The institutional sort of AAI bull-bear index, right? The overall index, which is closely tracked from an equity point of view, that seems to have, the bull-bear index seems to have collapsed. And there's been a big increase in bearish sentiment. And this has happened in the last 3 or 4 days. But this is, again, tracked more for US out there. The point is, we're getting into December. Seasonally, it's better part of the year. Go back in history and look at it. But the fact also is that it's also a little unclear as volumes, etc., start to thin off. So watch for some of these things as we come back into next week. In any case, I don't think it's anyone's case that we are likely to see a big move up or down. We are kind of very, very ranged in that sense. Let's welcome in Harish Krishnan on the show. Harish, good to have you with us here. Thank you very much. I remember, you telling us, I think 2 interactions back, that your the biggest risk for you was the CNY. But I don't remember, you said your risk was CNY appreciating or depreciating? Because it had been depreciating till recently, and only now it has started appreciating a little bit, relatively speaking. So just wanted your thoughts there to begin with, Harish.
Right, Prashant. Yeah, you're right. I do think that the call out on currencies is possibly a bit, under the radar, and that's something that can take a lot of people by surprise. At least let me tell you what my thinking on the currency moves are. As you said, it's a consensus move that the dollar will keep strengthening. There is this phase of US exceptionalism, but I would not be surprised if the dollar marks a top close to the presidency inauguration. Again, we'll have to really wait and watch out in case President Trump really decides to go quote unquote nuclear as far as tariffs are concerned. In which case, there is a small percentage that, we could go in for a massive amount of currency retaliation, which may involve a significant devaluation of the Chinese renminbi. And that is the, the black swan or the tail event that I am referring to, which can obviously have significant impacts as far as Indian currency is also concerned, as well as Indian equities. But that still is a tail risk at this point of time. I think our base case is that it is going to be more talk than action. For sure, there is going to be some action in the form of tax cuts, etc., which are all reasonably well priced in as far as the US equities is concerned. The US bond markets have also reasonably priced in with respect to the stimulus that can potentially come through, and therefore we think that post the Trump presidency, we will see a wave of normality coming through, which means that liquidity can potentially come back into emerging markets, like you alluded to. But that's more a Feb March kind of a scenario.
So December perhaps could be quieter, and that is not bad news for our markets, because we've gone through this period. First you had the US election, then the state elections, then the earnings in the Indian markets. This has all happened in the last 2 months. And come January, again you'll have the earnings season and Trump takes charge. So December is literally sandwiched between two, events, busy earnings and busy news flow kind of events. And typically December has been a good month for equity markets. So out of the last 20 years, for 15 years, in the month of December, the Indian markets have given a positive return, and on an average, it's been close to about 2.5%. The only other 2 months where we've had better returns, at least in the last 20 years, have been April, and the other one is July. And 2024, if things go, as they are right now, could end up being the 9th consecutive year that the Indian markets are going to close with positive gains. So far, year to date, we've rallied close to about 10%. But a quick word on what we should watch in the next 1 month. Well, interest rate decisions from US, India, China and Japan. RBI policy is on 6th of December, but the India and the US policy will be watched very closely. Geopolitical tensions, there is an OPEC meet on the 5th of December. The FI flows, it thins out towards the end of the year, but so far, year to date, the FIs have sold $33 billion in cash so far. And the last few days of the month are likely to be very active on the IPO front as well. There are some reports which suggest that 20,000 crore is still set, left in terms of the IPO action for the remaining year. But as I said, this could be a quieter month in terms of news flow, so therefore maybe even positive. But January is the one that the street will be watching, because seasonally it's been weak. There is Trump, takes charge on the 20th, and then on 1st, it's also the run-up to the Indian budget.
Well, I'll tell you what, the bulls will really be opening for a good December. Last December was very good. The December series, the markets were up. Yeah, for the series, it was up close to around 8%. So the bulls will really do with some gains towards the end of the year. But Nimesh,
so you're hoping a Santa rally, right?
Santa rally, and I'm off from the 20th. Whether there's a rally or not, I'll be rallying. But Nimesh, what about 2025? How is it shaping up for various asset classes?
Well, Nigel, it's very difficult to predict as to what 25 is going to be. But generally, what I've read from the brokerage notes of influential brokerages, looks like it's going to be a flat to a very moderate returns for emerging markets as well as India as far as equities are concerned in 25. So let me just go to the wall and explain why I'm saying this. But before I talk about 2025 outlook, let me just run through as to what happened in 2024, right? Just look at, let's do a recap on what happened in 2024. Global markets have been quite strong. The average returns have been 15 to 30%. The broader markets like Nasdaq and Dow were up 19-20%. The Asian peers like Nikkei, Hang Seng up 15%. DAX was up 15%. The only outlier in the global market was Karachi Stock Exchange up 60% Y2D in 24. So that's the global picture. How has India done in the global context? Well, we have relatively underperformed after the recent fall in the indices in the last couple of months. So the Nifty, the broader markets are up 22%. Well, the Nifty and Sensex are up 10% after a 10% fall, but we've seen in the last couple of weeks. So have relatively underperformed so far in 24. So that's what the Indian markets have done. Look at what the other asset classes have done. Gold has been the big outperformer in 24 so far. It's up 27%. The dollar is up 5%, and the crude is down 6%. So that's what the global other asset classes have done in 24. Now the key question is what to watch out for in 2025. I've gone through some big reports from influential brokerages. I'll start with Jonathan Garner of Morgan Stanley. They've put out a note and they expect just 1% return for MSCI EM index in 25. So they have a target of 1100 on MSCI EM index. They believe that the dollar EPS growth will be just 8% for 25 and 26 versus a consensus of 15% and 12% respectively. So earnings are going to slow down is what they expect in emerging market. However, they are more confident about India in 25 and they believe that the earnings outlook could be quite stronger, and they actually have an overweight stance as well. However, they believe that they expect the current cyclical slowdown to abate in 25. So that's a big call from Jonathan Garner of Morgan Stanley. The other big voice was Timothy Moore from Goldman Sachs. They expect a 4.5% Asia ex-Japan GDP growth in 25 and 11% MSCI EM ex-Japan returns in 25. For the Nifty, Goldman Sachs have a year-end target. So next year-end target of nearly 27,000, which means 11-12% upside even from current levels. Similar is the view from JP Morgan as well. So Rajiv Batra from JP Morgan has a Nifty base case of 26,500, and so means a 10% upside. Interestingly, they've put out 7 indicators which could drive the Indian markets in 2025. The first is the political stability. Second, which has been a big factor, is the faith of domestic investors. That's going to be quite key for India to outperform. Third, relatively safe haven in the amidst the trade war too. The fourth, the rural economy is expected to gain momentum in CY25. So that's something to watch. Beta to the US equities, geopolitical risk, which is likely to continue, which means that the risk premium is going to shrink. And of course, the under ownership of the global investors. So these are the 7 drivers for India to do well in 2025. So that's the JP Morgan view. Even CLS has put out a coin strategy, and they believe that the late stage cycle for emerging markets in India is likely to continue, which means the returns could be front-ended in calendar year 25. Earning sentiment has been a bit of a drag, but they do not expect to get worse from here on. And they believe that China will lead the returns in 2025 within the emerging market basket. So that's the CLSA quant view. Just let me end with the macro picture as well, or the macro outlook as well for 25. In terms of big brokerages, UBS has cut the GDP forecast for India for FY26 to 6.3%, and they expect a 75 basis point rate cut in CY25. Goldman Sachs has a GDP forecast of 6.3% for CY25, and they believe they expect a 50 basis points rate cut in CY25. However, Morgan Stanley has a GDP target of 6.5%. But interestingly, Morgan Stanley says that the first rate cut is expected only by April, and it's going to be a very shallow rate cut. So that's the big macro view as far as 25 is concerned. So broadly, the feedback seems to be expect a moderate return and needs to be little front-ended is what most of the global brokerages believe as far as 25 is concerned.
No, absolutely. And, what a year, as you began by 26% for the US. And I mean, it's been absolutely incredible. Harish, in terms of themes that you guys are watching and your team are watching, also where there are opportunities as we head into next year, what would those be? Sort of top of mind, top 2-3 themes.
So I think financials could be a theme where, there has been a reasonable amount of despair in the near term, given the significant regulatory actions that have happened. again, rewinding back about 18 months back on your show, we had come and said that, everything that is going right for banking is going right now. And therefore, we want to go underweight at that point of time. Now we are getting into that first point wherein, pretty much the credit growth has come down. You've got credit cost starting to go up, and you've got net interest margins under trouble. I think now we're getting into a zone of normalized earnings, which I think the street will like and would want to re-rate it at least close to the market multiple. These are all franchises which have got derated at a discount to the market multiple as we speak now. So that's one call out. The second call out, I would say, would be resources. This is again a space where we think that both the two largest economies of the world, US and China, can potentially go in for a certain amount of stimulus in their economies. Given the fact that you're coming through a phase where demand is not something completely fallen off. I think a small stoking of stimulus, maybe in terms of, say, bringing back manufacturing back into the US, can actually ignite some of the commodity prices. This is again a space. Just a raw data point. If I were to plot the metals share of profits in India over the course of the last 25 years, today we are at 2001 levels. So that's the extent of profit pool share that has kind of deteriorated for metals, a space which is completely underowned, and where there is a potential for an asymmetric payoff. So these would be the two areas that I would think, one could be a consensus financials. Most people have been saying positive on financials over the course of the last 12, 18 months. The only thing is, I think we are turning positive now after being underweight. The second is in terms of the resource plays. I think that could be another area that can take people by surprise.
Harish, what about IT? There is a mixed view within IT as well, and 25 could be a big year as far as earnings, as far the Indian companies are concerned. How are you positioned in IT names?
We continue to be positive in IT. IT continues to be a place wherein, if I look at the margin construct of Indian IT, most players are still below the pre-COVID levels of margins. In that same time frame, we've seen offshoring go up significantly for India. We do think that there is a lever for margins to come back, as well as potentially, once the US companies, post the stalemate that they've seen in the last 12, 18 months due to the macro worries, get a greater confidence. I suspect that we are going to start seeing tech spending get back. So I think it's a nice place to be in. It's just that it's done quite well in 24 already. And so therefore we do expect reasonable continued strength out there. But the big delta, like I said, could potentially come in from these pockets, which haven't really performed over the course of time.
Sure.
Okay, all right, Harish, point taken. So that is IT services, but the two other themes you said, metals and interesting stats there, and financials as well. We'll take a quick commercial break here. As promised, that piece on Alco beverages, and Nigel is
deep diving.
diving deep on the other side. So stay tuned. We're back.